presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I want to tell you, I've been listening to you since your radio days back in '99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the #1 market timer. I'm telling you, it's like he calls it really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. And boy, do we have a show for you today. Of course, it is Tuesday, so we're going to be joined by Basil, Chapman, and Tim Ord. Taking a look at everything right now. Some things I just want to put out there. Well, first, okay, let's just see what the indices are doing quickly. You're off 0.61% in the SPY, composite off about 0.63%. Dow Jones Industrial off about 0.81%. Same with the Russell futures there, trading off about 0.91%. Still have bonds, 10-year yield of about 4.3%. I don't see a surprise cut or anything like that. We'll have to wait to see if Powell has sounded almost dovish, at least in the last kind of meeting. So we'll see what he has to say. Of course, unknown inflation currently. You have gold ticking up right before the Fed meeting. This is some nice parabolic movement for gold. You have 3.01%. Getting near that high of 35.09. Crude ticking up again. This is a good indicator for future CPI. Okay, so we have, declining energy inputs, right? So that could really reduce that metric there. Tesla selling off 1.84%. Looking at some of the nukes, and we'll talk some about this, okay? You've had a massive spike since about 240. An article from Axios came out. Our UUU is just not moving the same way. Unfortunately, it's weird because I think it's even better position than UEC, but that's fine. CCJ moving up 2.89%, of course. We're holding that right now as well. Look, Oklo up 7.97%, SMR up 2.43%, Nextera up 2.65%, Lightbridge, they dope uranium fuel, trading up 2.5%. Now, I believe they have I'm not sure if it's a MOU or some kind of deal signed with Oklo, that Oklo would try to use Lightbridge fuel, something along those lines. Of course, UUUU we've been holding, it's up 0.66%. If they have earnings coming up, right? And, they've reported great things on the headlines. So I don't necessarily anticipate horrendous earnings or forward guidance from UUUU. If it just doesn't move with vigor, this is something that we might want to consider, right? Because sometimes what can happen with some of these equities is, I think they're great equities, they just don't respond the same way, right? Maybe something else is keeping people's eyes, in that kind of sector. So we'll see what happens with Quad EU there. You're trading at 0.44%, UEC up 5.25%. Man, some good stuff. Yeah, so supposedly the White House is planning executive action to try to speed up nuclear reactor deployment. Of course, we've gone over Trump's position on that in the past. Of course, his big thing has been drill, baby, drill, but he said if we're going to do this, nuclear, you could do small little reactors. Of course, we've been talking about modular reactors being the move for quite a while. So we'll see what happens. Of course, Trump today did say that there was a big positive announcement he was going to make either Thursday, Friday, or Monday about a topic that there hasn't been updates on it in some time, in the recent past. So there's a potential that could be this. Of course, that's just kind of guessing. So kind of hard to say for sure. But yeah, you're slightly sideways here today, really more to the downside. Your VIX is moving up 4.19%. So we're going to see what the Fed has to say tomorrow. And then, of course, you have Rivian coming up with earnings today as well. We'll go through everything a little bit later in the show. But let's move over right now. We're going to go to TFNN.com. Go over to the newsletters tab. It, of course, is a Tuesday. You know what that means? It means we are joined by Basil Chapman. Basil Chapman is the author of the Opening Call newsletter, is also the host of the Tiger Technicians Hour, which is on TFNN at 10 a.m. Eastern Time every trading day. Get the Opening Call newsletter. I cannot say it enough, people. It is extraordinarily thorough. Basil has been very active. We, of course, love having him come on, and I love listening to him at 10 a.m. So go ahead and check it out. You can do this if it is your first time, risk-free. We do, of course, have a 30-day money-back guarantee for all first-time subscribers. If for whatever reason it doesn't work out for you, you can get your money back, but I am betting that it will. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. Quite some, I think we've spoken about this before, but I'm a big nuclear guy. I like it quite a bit, and so it's nice to see that kind of leak come out. But I'm curious to see what you're seeing in the indices, because they're not doing as well today.
So this is very interesting. Let me just go through this again for those people who are not used to my technique. I try to identify the lowest low bar. After that, each peak gets counted. A, B, C, D, E, F, G. That's uppercase on the way up. At the fourth highest peak, that's peak D. Other things can happen. If a buy signal gets upgraded to a buy mode, we anticipate that there should be at least 4 higher peaks. Well, let's go to the story here. So the Dow has made a low at 36,661. It's gone to a peak A, a peak B, and a peak C. With today's lower high, with that little doji candle. It's often a little tiny doji candle could be a halfway marker on the way up between the lowest trough to move to upside, or it could be just a momentary pause. So we're watching this very closely because it has paused here. The Dow's down 325 at 40,893. So we've been long via the 3 times long, the UDOW. And it's done very nicely up until now, and it's at peak C. And I'm anticipating, even though the rule in the Chapman wave is that if it's breaking to new highs, you expect it should go to at least a D, but there could be a failure if it's under the previous high. But I look, this is the daily chart. The 9-period moving average is over the 14. That's a good sign. The MACD has expanded. That is really good. The relative little gray line here is a relative strength. Very nice. Stochastic's flat at 93%. If you are bullish, you can't ask for anything better than a 93% stochastic, and the on-balance volumes pull back. Now, of course, you can see the market today is just typical of what's going on. In fact, what was the question I sent to a statement I sent to the den? I made it up on the spot. Now I said this is going to be very interesting because we could buy on the news or die on the news. That's this kind of market right now. And it's happening almost, I wouldn't say minute by minute, but really it is hour by hour. And in this environment, I just have to look at it purely technically. And the technicals right now on the daily chart says there should be a high at least to the 41,583 level, which is the 200-period exponential moving average. So that's my stance right now. There's the music.
Yeah, please stay right there, Basil. We'll be right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman. Of course, Basil, the author of the opening call newsletter. Basil, before we went to the break, you're looking at the Dow.
Yes, and I just need to correct that statement because I just made it up, and fortunately I wrote it down. Otherwise, I wouldn't have correctly remembered it. It's fly by the news, die by the news. That's where we're right now. That's exactly what's happening. One little word that the eyebrow goes up, the market goes up. Eyebrow frowns, the market goes down. Anyway, so here we are. We're looking at the Dow, still very strong. It's not the greatest chart pattern. The weekly's improved a lot, but the key support I'll just mention is at the 39,500 level on any serious pullback. But right now it's holding very well. So what I wanted to also point out is that there are certain stocks that you can use in a way as a benchmark. And look, General Electric has been just a superb stock. And it's trading at 209.14 right now. And what I said to subscribers, we are long General Electric, been long for about a week. I said, if General Electric is able to hold today or even go positive, that's giving us a kind of a macro picture of the cyclical. I mean, this is General Electric aerospace, the aircraft engines. This is serious stuff. It's cyclical. It doesn't just, this is not a month thing or a 2-month thing. So this is saying to me that internally, there are certain sectors of the market that are holding well. So this, to me, is a little bit of a clue to say that if General Electric was down about 3 or 4 points at this particular time, I said, I think there's a problem. Right now, I think that's just a little bit, for me, it's a little bit of a sense of security that there is buying going on. That's important. The other thing is, within the context of the different sectors, I'd spoken to you about this last week, and I said that the gold sector, to me, still looked pretty good, especially those weekly charts, and the weekly chart and the monthly charts of both the GDX and the gold. Silver was not participating as well, and it seemed to me that I've always considered gold to be part of a geopolitical, economic, it's like an insurance policy. And I think that's really the issue here. We can talk. Is it really that people are using gold, in production? No. This is really it's. I look at it as insurance policy, and if you look at the chart, you'll see that this move of the last 4 days from the 3,200 level to the 3,400 level, it's just been straight up, and it's kind of telling us that the market is saying that internationally, countries, really big institutions, are putting money to work. That's what the chart looks like. I could be wrong, but I'm just doing the chart as an informational aspect, and I think that's good. So if it goes to a new recovery high, an all-time high, that's above the high of the 22nd of April of 35.09, and it does it nonstop in this particular move, then I have to look at the market a little differently and say, if gold is going this high and countries are that nervous, maybe I should also become a little bit nervous. But so far we're along the gold, and I'm happy about that part of it. So here's another aspect that I think is important. I'd spoken to you about Bitcoin, and I said it seemed to me that it might not be the correct analysis, but just from the chart, the way the dollar's been weak, the way the euro hasn't been all that strong, and the way the Japanese yen, it seemed to me money is also flowing into Bitcoin, and it's, in a sense, it's a safety thing. And you would never guess that. I mean, a year ago, you wouldn't be saying that. But now I think it is. And that makes this Bitcoin a lot more legitimate to folks who had never been in before. This is not the crowd that got in to, there was a 2019-18 top in that December when it made a peak D in the daily chart and just tumbled. There it is right there. This is a little different. So I'm watching it closely. We are long for subscribers, and we're taking a little bit off just for money management. But at this particular point, the fact that after yesterday's pretty serious pullback, it's now up $800. It says with a 9-period, look at that 9-period moving the green line way over the 14. I consider that to be very positive. The MACD is positive. The relative strength is weakening just a little bit, and the stochastic still over 80% at 86%. So far, I like this action, but here's the issue. This trend line in the weekly chart for Bitcoin, I call that, and let me just show you what I usually do. I go like this. I make that green, and then I click again with a little narrow channel, and I call that inside, Chapman Wave inside track repellent zone until it can really decisively break above. So if Bitcoin is able to, it's at 95,515 right now. Anytime it just touches, doesn't have to close it just has to touch 100,000, let's call it 101,000. I think that changes this. It changes, look, that 9-period moving average, the week has just begun, so I can't talk about it as turning green, but there is a sign that at this point it's green, but it's a weekly chart. I have to wait for Friday at 4. But if the MACD crosses positive and the 9-period moving average crosses positive, that will give it strength. And right now, I'd say 92,000 is probably support. 92 to 91,000 is the support that holds. So I've been very specific for subscribers. We did add to our AIQ, which is the AI. This is the ETF, the Global X Artificial Intelligence ETF. It's at a peak C. I'm watching these double tops, 38.81, and then yesterday the high was 38. What is that? 38.38. So I always am watching these double tops because markets can pull back quite sharply from that. But so far it's holding very nicely. So we're along for ages. We've been along. Look, you can see in the monthly chart going all the way back to 2024. But we took profits, quite a bit of profits. Now we've added to that position. And I think it's saying that in the I'm trying to look at this. There are a lot of sectors that are really very, very weak. But if you look at this is artificial intelligence, which was written off about a month ago. People said, oh, well, that's it. Wait 5 years, wait 6 years. This is saying to us, no, a lot of money seems to still be going into that area. So I've chosen specific areas to be to be as careful as possible to choose what is working and add it to that. Now, not everything's worked out. We had a new position, which I thought did everything I wanted it. It's called Bowhead Specialty. It's in casualty healthcare liability insurance. And we bought it at 39 and ran all the way here to 41, just under 42 at leg D. I forgot that there was earnings coming out. But even with earnings coming out, if we have a position that's doing well, I don't worry about the earnings because usually we've got some security and we've got enough profit that if it pulls back, it's okay. This one we just got taken out and now it's rallied quite sharply. So this is BOW is the symbol trading at 40.59. We got taken out for a little bit of a loss, and I've already taken something off. This one I didn't because it was going towards that 42.29 high of the 28th of March. Once again, I want to mention double tops are something in this market you've got to be wary of. It was $42.29 on the 28th of March.
Yep.
Yesterday it ran to what? 41.98, just underneath that, and then it pulled back. So it's a technique. If you want to talk about technique, look at the what are we looking at? Palantir. Talk about double tops.
Oh yeah.
Look at this, 125.41 on right there. The week of the 21st of Feb, 125.25 yesterday, and today's down at 109. So you've got to be careful.
Quite the movement.
Yeah.
No, I was saying, quite the move in Palantir for sure. Basil, thank you so much for coming on. We'll see you tomorrow at 10.
Thank you very much, Jacob. Have a good evening.
Take care, Basil. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are going to hop over to Tim Ord here very soon. I just want to take a look quickly at LifeMed. You're trading up 4.77% today, trading at $7.90. They have earnings coming up after the bell. Of course, we kind of went over how they kind of matched up, at least compared to HIMSS. We looked at, market cap to revenue, trading at, it's only 1.57 times versus HIMSS at 5.5. Same kind of deal, with their gross profit, it's about, their market cap's 1.77 times gross profit as opposed to HIMSS. Now, they are pre-income, essentially, so they're still negative. Spend a lot of money on advertising. Of course, that kind of goes away. Some things that I feel bullish about with this, okay, is that they have expanded. Of course, they have that deal with Wegovy. I believe they're able to sell Eli Lilly's drug as well. So they can sell tirzepatide and semaglutide. They have expanded into Medicare. Now, unfortunately, I believe on April 7th, the government said that Medicare would not cover the cost of GLP-1 drugs for weight loss. But that's okay. I still think it's a massive market for them. Additionally, they are starting, it's called, Rex Peptides. So they're doing peptide sales, and what is the other thing? I believe it's hormones. I think they were trying to break into that. And then additionally, they're seeking to add kind of like a LifeMD Woman's as well. There's a lot of cool stuff in the barrel for LifeMD. They have really grown quite a bit. You're taking a look at HIMSS. Now, HIMSS was actually off today. This is an insane movement for HIMSS. I don't know what happens. People get under the impression that a short squeeze is going to occur, so they just pile drive into these equities. HIMSS earnings were fine, right? I mean, you have massive revenue growth, daily user growth, all that kind of stuff is right there for HIMSS, and that's fantastic. That's what I think we can kind of take and apply to LifeMD. I think telehealth is just a very, it's a good sector to be in, and this kind of stuff is going to grow. Now, LifeMD and HIMSS obviously differ. LifeMD, you're going to have, let's say like a doctor, right? And that is now your doctor, as opposed to HIMSS, where you're just kind of going to talk to someone. Additionally, you get prescriptions, a wide range of prescriptions very quickly from LifeMD as well. HIMSS, the reason why you had that massive sell-off is because their operating margins were not very good. Again, this is now getting very, this is some high value right now for HIMSS, okay? And again, good growth, revenue, and profit-wise, operating margins not as hot, really contracted quite a bit, okay? Not seeing that being the case with LifeMD, so have just a little position in LifeMD for earnings. We'll see how that goes. This gets spooky after major gap ups because this can just so quickly come right back down as well, especially after, again, big gap ups. People want to take profit, whatever that might be. You've had some people discussing, oh man, their CEO is selling stock. That is true. He did sell on the rip up, but it's about 1.8% of his total earnings. CEOs do that because it's part of their compensation package. When you get, put yourself in his shoes. You get a massive gap up like this on some random stuff. You're like, man, let me just take profit, like whatever, right? I don't think that's indicative of anything either way, is what I'm trying to say. There are certainly instances where I believe that is weird, like very consistent divestment over a long period of time. I don't necessarily find that fantastic, especially if it's not coupled with any impressive stock movement or anything like that. So that's kind of what we got going for LifeMD. We'll see what goes on with that. Of course, I believe we have Tim Ord on the line right now, but we're working on getting his charts up. Tim, how are you doing?
You got my charts up?
So they're saying they do not have the charts, but I'm going to try to pull them up. I just need a moment to get into my email here.
Oh, okay. So you're not seeing my charts.
That is what the producer is telling us. So give me just 1 second here to pull this up. Okay.
Right. I thought we did everything right here.
That's fine. We can figure it out over the break as well, of course. But I do have chart 1 up for you right now, Tim.
All right. Anyhow, it's just kind of a review. It's it's the ARMS index on a 10-day, a 5-day, a 2-day, and a 3-day. My point is these trend readings need to get up around 1.2, and none of them are. The 10-day is the most important, and it's coming in 106. It needs to be 1.2 or higher. Again, it's kind of the old saying, you got to have panic in the market. If there's no panic, the market's kind of just go into a drift mode. So there's no force to the upside because there's no energy, which is panic, to drive it up. So anyhow, I'm kind of waiting for it. I do a short here, but we're running into the May 1st gap. And a little bit on lighter volume. Really don't have a trend reading to suggest that's going to be a worthwhile low, but we're running into that gap on lighter volume, so you may see a minor bounce here, but it's not a bounce of any consequence to the upside because, again, you don't have any trend readings. The 3, the 2, the 5, and the 10-day in panic modes to really have energy for the rally to go. So there's kind of a doldrum here, but I expect a pullback to continue. So I don't see any worthwhile low here. Maybe a bounce, but the bounce is not really going to go anywhere. Flip to chart 2.
Yes.
This is the wag breast thrust indicator, which triggered, I think it was last Thursday. But anyhow, I got couple of shaded pink areas on that chart, and I got an outline with the blue lines. Previous times where the Zwag breast thrust indicator was triggered. And so we ran into that on this decline into that April low. We ran into 2 previous times where the Zwag breast thrust indicator formed. And so I think we're definitely in a base building period. The low actually may be in, but at some point we're going to pull back. So yeah, we're in a process of making a bottom in the market, is my point. And how far can the next pullback go? Well, it could go back down to, let's go to chart 3 real quick.
Yep. Yeah, you're good to go.
It could, you got 3 gaps up, and we really don't have any energy in the trend reading, so we don't really have any buying power to the upside. But I think we may go all the way back down to that first gap. Was on April 21st. I think we're probably going to go down there. It'll take us time getting down there. Seasonality wise, it's kind of lukewarm this week, but next week's probably down. I hear the music. Maybe we can get my charts up.
No, totally. Tim, stay right there, folks. We'll be right back with Tim Ord after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Again, I want you to go over to ord-oracle.com. You can check out Tim's website. Of course, he has his newsletter there, book. You can contact him as well. Tim, before we went to the break, we were taking a look at some of the ratios for the SPY.
Right. Well, the SPY, we got a 3-gap up kind of a play going on, and I'm thinking we're pulling back. My inclination right now, if you look to the far right, I got a circle over the numbers at 550, and I got, looks like about 495 on the SPY. The 550 is actually the April 9th high and the April 9th low. That bar was actually a sign of strength day, and that's what kind of flipped this decline into actually a bull market, or back into a bull market. Not saying we're going to go straight up, but we're in the at a minimum we're in the bottoming process. But I do think we're going to go back down to the April 21st low at some point, and there's a chance we could get down to the April 9th low. The April 21st low comes in around 510. Give or take. And the April 9th low comes into that circle area, which is around 495. I think that's where the next bottom's going to be. So it's this rally. Everybody got really bullish because this wag breast thrust indicator and a bunch of other type indicators flipped to bullish signals for the intermediate term. That's for the intermediate term. I think that's the case. But on a short-term basis here, I think we're going to consolidate pretty much through all May, even though we're bouncing against a gap right now in lighter volume. That gap probably will hold, but it's not a bottom of any consequence. So it may be a day or so of bounce, then we'll probably resume again to the downside. So a little bit of patience. Would I look for a short here? Well, the trouble is, I don't see a good short because we're testing the gap right now in lighter volume. That means the market's going to take a bounce. So anyhow, I don't see a good short. It's too soon to go long here. But I think 510 area is where the bottom's going to be, I bet. That worst 495. So that's my take on it right now. So I'm actually on the sidelines, not doing a whole lot. So
totally.
It's a little bit of a mushy market. There's an old adage, sell in May, go away. I think that's going to prove well for this month. But I think end of May, probably 1st of June, there's going to be a decent buy signal. So we'll play it.
Totally. And what you're saying is it's so spot on with this market, right? I mean, there's just not a lot of volume here. It's hard to play it either way. Of course, you still have some headline sensitivity. It's just been a weird market to play, at least in these past few weeks. So yeah, definitely with you there and stay on the sidelines.
Yeah. Well, normally when you get these big volatilities like April, it was straight down, straight back up, kind of a deal. A lot of times the market goes into just the opposite. It just dulls you to tears. And I think we're in that period. Then once And when everybody gets disinterested in the market, it'll be time to buy, which few people will.
Absolutely.
So that's how this game works. Is the game's opposite. But a little bit of patience. Those gaps are not going to remain open forever. The ones I shaded in pink there. This one we're testing right now, which is that one up around 560, 555. It's a lot of light volume, but it's not going to go anywhere because we don't have enough panic in the trend. So let's flip to the gold market. We don't have a lot of time.
Totally. Let's do it. I know that the GDX tested that gap up perfectly almost. We're up, I think, 3% right now.
Yeah. 3.61 right now, actually. 3.61. Yeah, we got a little bit of energy here, but well, we'll look at the reason why I got out of the market. I got out late April. Forgot exactly what today was. This is one of the charts, reasons why I got out. But the top window is GDX. Next window down is a cumulative up-down volume. One below that is a daily cumulative advanced decline. And the bottom window is a daily GDX-GLD ratio. When three of the four, or it can be all four, but at least three of the four get above the upper Bollinger Band, the market's extended on a short-term basis. Mm-hmm. And so it's kind of a short-term sell signal, especially on GDX, got way above the upper Bollinger Band. And normally you consolidate back down. The minimum signals of this type are at least a month, and sometimes they're 3-4 months. So I think both markets, GDX and the SPY, is probably going to pull back into late May, early June. I don't know exactly where the next low is, but we'll find it and we'll get long again. But here's one chart, the reason why I expect consolidation, and go to chart 5. This is another one. This is the monthly GDX. With this Bollinger Band, normally you get 80% above the upper Bollinger Band. The market is extended. It didn't close above there, but I thought the market would hit around the 50 area. I think get up around 52, 53. But it did get above 80% above the upper Bollinger Band. So you kind of pick your spot and you get out. And normally these are, well, the previous ones going back to 2016 are multi-month. I don't think that's going to be the case for this one. But I do think we'll probably consolidate into maybe June, possibly July. July, seasonality-wise, is a pretty good month to buy gold. But I think we'll pull back down around 39 area. This chart says around 40, but 39 is quite a bit of support. But, I'm out. We'll pull back down to the support area on this chart. But if you flip to chart 5, the pattern I think is forming here is 3 drives to the top pattern. Kind of a repeat what I said last week. Nothing's really changed. The market tries to rally. If you look at the day after after the high day, the next day is a big down day. If you compare that volume to what volume's doing at today's volume, you'll notice that down volume is a lot higher than today's volume.
Yeah.
Well, volume goes in the direction of the market. So you compare previous down days, how much volume. If it's pretty light volume to the downside and heavy volume to the upside, you take the high volume to the upside. And so we're running into that bar off the second day off the high on really high volume, and we're going into that volume, or we're going into that day on a lot lighter volume. So energy's down on if you compare those 2 days. So I'm thinking this is just a bounce in a downtrend, and you'll probably see quite a bit of volume once you get down around 39, which is my target. 3 drives to the top pattern are not long-term topping patterns. The book says they're timeout and they're an uptrend. So I think just a pullback. Look to probably get long in that 39 range. Could be 38, could be 40. Don't know exact what price it is, but I'll have some indicators that kind of will identify that once you get closer. But bigger trends up. You find good gold stocks are on a buy. I think you should buy them. The reason why is on chart number. I guess we're not going to really get finished on this, are we?
Well, we can go into the next segment if you'd like.
Right. Anyhow, it's the month. The bottom window is a month. I'll tell what it is. Well,
yeah.
Wait.
That's what we call a cliffhanger. Folks, stay right there. We'll be right back for the last segment with Tim Ord. Stay right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup, joined right now by Tim Ord of the Ord Oracle. We have one short segment. Tim, before we went to the break, we're looking at the monthly HUI NDX chart.
Yep. Anyhow, this is a monthly chart. It looks at the real big picture. Appears to be a cycle going on. Every 12 years, this cycle pops up. It doesn't really have enough history, really, but it has worked the last two times. It appears to be working this time. And the reason to trigger this, the bottom window is a monthly GDX, the top window is HUI, and the middle window is HUI NDX ratio, and I put an RSI with it. Usually in downtrends, this RSI will stay below 50. It'll bounce around between 30 and 50, and it'll stay way below there in downtrends where NDX is outperforming HUI. In uptrends, the RSI stayed from 50 to 70. And that's what happened between 2000 and 2012. Gold stocks, HUI, gold stocks outperformed the NDX. So I'm thinking we got a reading now at 61.65. That's the first time that RSI has jumped above since 2012, above 50. So this is what happens is HUI is way outperforming NDX, and you need a sign of strength off of a bottom. That's exactly what happened here. If you don't have a sign of strength off a bottom, then it's just a bounce in a downtrend. So we did get the bounce. RSI had to get above 60, thereabouts. 58 probably been close enough, but we're at 61, 65 right now. And so this is an initiation of an uptrend. How long will it last? Well, the previous ones lasted 12 years. Well, this last 12 years, there's probably a good chance it will. So we'll see. But
Tim,
gold stocks is the place to be.
Tim, thank you so much for coming on. We'll see you Thursday, all right?
All right, see you then. Thanks a lot.
Folks, check out ord-oracle.com to get more from Tim Ord. Thank you so much for joining me today. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.